Hey guys, it's Andrew from Stockmoney Lizards, and today we have some really interesting time analysis on the distance between bear markets and bull markets. So let's just dive right in. So if we look at the zoomed out chart of Bitcoin's life, what we can see is that it printed a high in November of 2013. It printed a second high in 1st December 2017 and the third high in 1st November of 2021. The cool thing about this is that we have 1,491 days between the first and the second high, and we have 1,431 days between the second high and the third high. So if we just project another 1,430 days out into the future from the high in November of 2021, what we're saying is that the high which is coming next will probably land somewhere in 2025 October. Now if we look at the lows, our low was in January of 2015, our second low was in 1st December 2018, and the third was in 1st of November 2022, we hope. Now, from this analysis, what we can see, which is even more accurate, is that the bear market from one low to another low takes 1,431 days. And if we were to project this out for another 1,431 days, we would hit the low in roughly September, October of 2026. So, with that knowledge, what else can we sort of determine from this type of analysis? So we had the first halving in 2012, we had the second halving in 2016, which is this line over here. We had this third halving of May of 2020, and we had the fourth halving coming up in March of 2024. At least it is forecasted to come out in March of 2024. Now, what happens between a top and a bottom? Price obviously goes down. Now that takes on average 365 days between 2017 and 2018. It took 365 days between 2021 and 2022, and probably once we get the high in 2025, price will go down for 365 more days to October 2026. So basically what I'm trying to say is a plan for buying and selling Bitcoin, is it as simple as selling at the 1,400 mark and buying at the 1,400 mark and enjoying a full 365 days in between? Now, it could be. Now, what happens when we look at the RSI? So the RSI is the stochastic indicator, basically measures momentum. Whenever the momentum is outside of the 80%, what we're saying is that there is overbuying. When the stochastic oscillator is marking lows of below 20%, what we're saying that there is overselling. So it might be a good opportunity to buy. So there are instances when you look at the monthly time period, which is what we're looking at the moment, where the oscillator will jump into the 20% mark and make its way to the top. Now, if we look at the situation here in 2015, this took us 152 days. And in that 152 days, price went up 106%. If we look at this situation here, okay, price has pierced the 20% mark and took 123 days to go up 147%. So if we just take the average of 152 and 123 and we just drag it out maybe at this level, what we can say is that as we're piercing this mark now, it might take us about 120 to 150 days to get to the top and stay at the top. Now, during that time, we can maybe expect to see a move in price similar to what happened over here. So in this case, you do not want to be outside of this opportunity because it's quite a nice gain. 100%, which is double your money, 150%, which is essentially saying you have 1.5x your money. So here, let's say we get a 100% increase. Basically, we could be saying that we'll be hitting the 40,000 mark, which is a price we identified in our last video when discussing Fibonacci levels. So if we zoom in quickly, what we can see is it broke. So we're looking at 2015 now, and the 150 days where the RSI moved upwards on the monthly scale. What we can see is that on the Tom DeMark indicator, we had a run for 9 consecutive weeks with very strong Heikin-Ashi candles, with the top coming in 4 weeks within this run of 150 days. We then had a slowdown, and the slowdown was evident because we had lower shadows in the Heikin-Ashi candles, and we didn't have those lower shadows here. We then made a push to the upside before coming back down to meet the moving average. If we look at 2019, April 2019's move of 123 days to the upside, we were also coming out of a nice bullish movement to the upside on the Heikin-Ashi candles, as you can see here. We hit the top of a 9, and as we hit the top of the 9, it was indicated to us that price will slow down from the week before. Why? Because Heikin-Ashi was printing upper shadows, strong bodies, and no lower shadows, so price just was an indicator that was going up. In the 8th week we saw the lower shadow, so our alarm bells were raised. In the 9th week we sort of had a situation once again, but we had a stronger body than the previous one, and that was seen as a bullish move in the Bitcoin market, and it kept on going up before consolidating in this particular area. Now, if we look at the current situation, we are moving into the level over here. Why? Because the RSI is about to hit the 20% mark. So if we just have a look at what's going on now, basically we have run upwards for 8 consecutive weeks on the Tom DeMark indicator. We are above the 20-week moving average, which is a bullish sign. We are holding above the 20-week moving average, which is also a bullish sign. And now what I am expecting is that either we will hang around in this area for an amount of time before then moving our way up, potentially seeing highs or peaks or price movements to the upsides to at least 100%. A move of 100% would basically see us hit a price of about 41,000. So we might hit 41,000 or something in this region, which touches on the Fibonacci levels we discussed in the last video. And then possibly we can start making our way back down to these price levels again of to retest the 24,000. It depends on the momentum of this move to the upside. This has been an update for today. Basically, I just wanted to touch on the simple days that you get between one bullish move to the other, and the days normally between one bearish move to the other, and the time where you should really be out of the market, which is this 365 days, which basically lands in between the high and in between the low. That day is October of 2025, with a possible entry in October 26. This has not been financial advice, it's just commentary based on what the chart is currently saying. It's just analysis. I encourage you to do your own research. Other than that, I hope you've enjoyed this video. Stay safe, guys. Thank you. Bye.